This next interview you're about to see is with Markus. He's been trading for over 20 years and he came from Germany over 20 years ago with just a few boxes. He then started Rockwell Trading out of his 2-bedroom apartment, and his most successful strategy that he is known for is the wheel options strategy. What makes this strategy so popular is it only takes a few hours a week to make consistent income. In today's episode with Markus, we're gonna be diving deep in how he would actually start over if he had to, so that way all of you new traders can get started on the right foot. Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be The Trader. Today's gonna be a great day because I have my man Markus from Rockwell Trading, who's been trading for over 20 years. And today he's gonna be sharing some insights that I know all of you are gonna be able to implement it right away and change, hopefully, your future at some point in your life. So Markus, welcome to the show, brother.
Hey, thank you for having me. I'm a big fan of the show.
Thanks, man. Thanks so much. So one thing that's really interesting from your perspective is now you manage a multi-million-dollar portfolio.
Yeah.
So by doing that, I'm sure you've learned so much through that journey that I bet if you could go back in time and start over, maybe you were working a real job back then as you did at IBM.
Oh, yeah.
And you started saving up money. Like, how would you go about getting to where you are now, and what skills would you bring from what you're currently doing to the beginning?
Oh my gosh, if I could go back in time and talk to my younger self, I mean, first of all, when I was working at IBM, I was making good money. I mean, I advanced on the corporate ladder. I made a 6-figure income, and I spent it all, right? Because, I mean, I was young, and I liked to have the big apartment. I didn't want to budget. I thought this just for, budgeting is for losers. Honestly, that's what I thought. But you see, then over the years, I learned way too late in my life about the 50-30-20 rule. And that's what I would tell myself. Apply the 50-30-20 rule. So here's the rule in a nutshell. So the idea is that you take 50% of your salary for your needs. And your needs is, of course, housing, is transportation. You need to go to jobs somehow, right? It's what you truly need. Another 30% for your wants. Yes, this is a fancy latte. This is going out to a restaurant, right? So this way, you're not restricting yourself. But this leaves you with 20% that you could put away for savings. And so this is the first rule, that I would be way more stringent about it and say, okay, I can live on 80% of my salary. I should be able to, especially when you make a 6-figure salary, right?
Yep.
I mean, and so with $100,000, you can put away $20,000 a year. And within 2 or 3 years, you have a decent sized account that you can get started with.
And what would be that first step? Because I know some people are like, okay, let me go ahead and apply this rule. And when I do have that amount, and some people might have it right now, what would be the next step?
Yeah, I mean, another huge mistake that I made is leaving it to the professionals, because this is how I was raised, right? I mean, this is what they're telling me, leave it to the professionals. You can't outperform Wall Street. They know much better. They don't, right? I mean, if they did, they wouldn't be working an 8-to-5 job like I did,
That's right.
So this is where I would just getting myself educated about some basics of trading. And I would start managing the money myself. And if I had a smaller account, I would definitely start trading. See, there's huge difference between trading and investing. And early in my career, I started investing too early. What does it mean? With investing, you're taking it safe, the long run, right? You're looking to kind of go with the market, the 10 to 12% per year, right? And I mean, this is not how you grow a small account. The way to grow a small account is you have to take more risks. And you see, while you still have a job, when I had a job, no problem, the money is coming in every month. But if I'm taking this 20% and try to grow this through more aggressive trading, this is how you turn a smaller account into a bigger account.
Now, with that 20%, and you're someone starting new, is there any guidance on what should they start on in terms of learning the basics? Like, is it like terminology? Is it technical analysis? Is there a certain path that you would recommend people take to at least get a good foundation?
You see, it's so interesting. I'm glad that you mentioned it. I'm German. And then I'm the son of an engineer. So I have a huge handicap, right? I mean, I just think super engineering. And this is why I thought indicators. I need to learn everything about indicators. Boy, was I wrong. I mean, indicators are just crutches. They're telling you whether stock is going up, down, or sideways. These days, I kind of abandoned all indicators, and I'm drawing trend lines and boxes on my chart, right? When the market is going sideways, I draw a box. I buy a stock at support, I sell a stock on the way up, right? If I can draw a trend line, I can draw a trend channel. And then I buy at the bottom of the trend line, and I sell towards the top. I mean, so you can keep it easy, and this is where I thought, because everybody told me that trading is so difficult, trading is so complicated. Well, because most people, I feel, make it too complicated.
We cover a lot of information on trading here on Be the Trader, but none is more important than the broker you choose to execute your trades. There are many reasons I use Cobra Trading every day, including multiple order routes where I can get fast execution, great availability on locates for hard to borrow stocks, and fantastic customer service. But don't just take my word for it. Both Benzinga and Forbes Advisor have awarded Cobra for best in class for short selling and day trading. Isn't it time you choose a great broker that you'll enjoy working with? Sign up now by using the link below, and Cobra will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. I know you'll be as happy as I am when you trade with Cobra. Now let's get back to the show. And you're probably talking about those people who end up having like 30 indicators, and it looks like a map of just like lines everywhere going, so you can't really make a decision.
Well, exactly. And you see, here's the deal. As traders, we want to be right all the time. We would love to have 100% winning percentage. It's not possible. That's the other thing. When trading, you're assuming risk, and you're getting paid for assuming this risk, right?
Yep.
The higher the risk, the higher the reward, right? And this is why in the beginning with a small account, I would start trading to a larger account, and then I would go back into investing, because it's easier to make 10 or 12% when you have $1 million than trying to make it on $30,000.
And you know what's interesting is, you said, when I asked you about like what would you do in terms of build a foundation, you immediately highlighted what you would not do, and that is like go into all these indicators. Whereas most people, and I'm one of those people, is I dived into indicators just like you just mentioned.
Oh my gosh.
But what's interesting is you said you like to keep it simple. You like to look at support and resistance. You like to draw boxes and trend lines.
Yeah.
And I know some people are listening to this and they're like, I mean, is it really that easy? And then why do people say that it's challenging? Like, why would you say it is challenging for those people who do say it's so hard?
Well, first of all, think about it. I mean, the money management industry is a multi-trillion-dollar industry, right? I mean, the guys who want their money, the financial advisors who say, leave it up to me, I know better. I mean, if a financial advisor would know what he's doing, he wouldn't cold call people, right? I mean,
that's right.
I looked it up recently on Glassdoor, and the average financial advisor makes $80,000 as a base salary and another $60,000 in commissions. Actually, it said commissions and tips, and this is where I thought, tips?
Tips.
That's interesting. It's like, hey, here's a 20 things, right? I mean, but anyhow, they lumped it all together. But if you think about it, commission, so what does it mean? It's a salesperson, right?
Yep.
So why do people say it's so complicated? Because they want you to give them their money, right? I mean, think about, how do the big banks, JP Morgan, Citibank, how do they make most of their money? Through fees and managing money, right?
Exactly. And it's interesting because, like, when you say, people immediately think of account managers. Like, that's one of the things they think about. And they're like, and it's so true that the account managers typically just get paid off of one asset, or paid off of certain things that they push, right? Whatever they get paid on is either opening accounts. They either get paid opening accounts or getting paid off the commission of what accounts they end up buying, or what stocks or ETFs they end up pitching to you. Now, what I'm curious about though is when it comes to keeping it simple. Would you say, and what I was trying to get to earlier is like, would you say the challenging part of keeping it simple is that most people don't really truly understand what it is to be a full-time trader, or what it means to be successful at trading, in terms of the patience, in terms of taking losses, in terms of that aspect?
You just mentioned the key word, it's taking losses. Losses are part of our business as traders, right? And it doesn't matter how many indicators you have on your chart, whether you spend 2 hours in front of your charts, 2 minutes, or 6 hours in front of the chart. You will have losses. But of course, that's not what we want, right? We would love to have the 100% winning percentage, which you get on a savings account if you put your money in savings, but then you only get 3 to 4%, right? Or maybe 5% if you're lucky in a high yield savings account. So this is something that I would tell my younger self, stop chasing this dream that you will never have losses. There will be losses. Focus on controlling the losses because the winners will take care of themselves.
What is something that they can expect in terms of like, have you met traders who like different win rate ratios? Like, is there a perfect ratio? Like, I need to have a strategy that has a certain percentage win rate, or I need a good strategy that has this kind of risk reward to be successful. What is your experience in that?
You see, there are strategies out there that are very successful with a 20% win rate. This is where you go for the unicorns, right? Where you try to 10x your money on a trade. And you can have a lot of losing trades and the one winning trade makes it all up. I tried these strategies, they're not for me. I want to be right most of the time. And so this is why I prefer trading strategies that are around a 70% winning percentage. So this means 7 out of 10 times you're right, makes you feel good. Now, if you can manage with this 70% that your winners are equal to your losses or even slightly bigger, you're already golden, right? I mean, because if you win more than you lose, more often than you lose, and you win more money with every win than you lose, you're okay. But even if you had a 1-to-1 risk-reward ratio with a 70% winning percentage, you would do just fine.
And I know you focus on options now. Would you recommend someone starting off in options or doing equities? Just curious.
First of all, I do both.
Okay.
I trade 2 different strategies. I trade one strategy that is very simple on pullbacks, right? I mean, buy the dip, buy the dip. We heard from Kramer all the time, right? Buy the freaking dip. So that's what I like to do on quality stocks, the S&P 100 and the NASDAQ 100, because these are super solid stocks. In the long run, they'll go up. I buy on the dip. And then, yes, I like to layer in with options. Now, if I started trading with options, and I started trading with more complicated strategies, and this is how I lost a lot of money. So I would say, keep it simple. I mean, don't buy NVIDIA at an all-time high, right? I mean, first of all, don't go for the masses. When you talk to an Uber driver and he recommends a stock, stay away from this. I mean, that's kind of my rule, right? But if you stay with solid stocks, I mean, right now I'm trading Coca-Cola, Johnson & Johnson, I'm trading Merck, right? So these companies are not going bankrupt. After they run up, they have a retracement, that's when you get in, and then you get out and not being too greedy.
Are we falling back into investing here, or is this will still be good for someone who is day trading? Because the next thought is like, okay, you know, we're talking to a guy who has a 100K salary, because most people who are even interested in investing are doing somewhat well in their career for the most part. And so they want to invest their money. And so let's just say we're using that example of the 50-30 or 50, what was it?
50-30-20.
50-30-20. If we do that example and let's say they end up saving that money and they only have 20K, right? And they're trading that. Some people will argue, and I just like to speak for the audience. I trade large caps and I like it, but some people will argue that large caps or mid caps can't give you the same returns as small caps, and they argue that I can't buy that many shares. So just curious what your thought is on that.
First of all, yes, again, it goes back to risk and reward, right? The more risk you want to take on, the more reward you can have, right? So this is why penny stock trading is so popular, right? I mean, with penny stock trading, you're taking on a lot of risk, and if a penny stock takes off from, I don't know, 20 cents to $2, yippee-yay, okay? Fantastic. But most of the time, you're having duds and you're taking the small losses. So this is why with larger cap stocks, it doesn't really matter because most of the prices are between $50 and $200. If you think about it, NVIDIA went to $1,000. What do? They do a stock split to become more attractive to the retail investor. Tesla went up to $2,000. They did a stock split and came back to $100, right? So this is where I wouldn't worry about it because whether you divide $2,000, so let's say you have $20,000, and let's just say you divide it over 10 positions. So you invest $2,000 in each position. Does it really matter whether you're trading 10 stocks of 200 or you're trading 2,000 stocks of $1? $2,000 is $2,000. It doesn't really matter.
Would you say you could still make good returns on a small account doing that way?
So here's the deal. What I would shoot for, and this is where also going back to my younger self and saying, stop listening to those who tell you that you can make 600, 800% or something like this, right? I say, be realistic. try to shoot for 30 to 60%, right? And do this consistently, because if you think about it, this is almost like 1% a week or 3 to 4% per month. And this is where I'm a big fan of SRC profits: systematic, repeatable, and consistent. You see, you will grow your account quicker with 3% per month consistently than having the 30% winner, and then for the next few months nothing is happening or you're losing money.
Yep. I really like how you like to highlight slow down and like stop trying to hit it out of the park, because I feel like that's the majority of messages. And I get it, like even, you know, on YouTube, to get people to click on videos, you got to say like you made X amount of money. But what they don't understand is how hard it is, and to have that patience to slow down and take the time to make it consistently, which I think you're highlighting very well here. So I appreciate you saying that.
You see, I'm freakishly tall. I'm 6'6", right? So when I was in high school, right, my gym teacher said, listen, I want you to do high jump. I said, okay, whatever. So this is where he said, okay, let's practice for it. And at first, he put the bar 2 feet high. I mean, I can walk over 2 feet. I mean, I don't even have to jump over it. And he said, no. I want you to focus on technique. Jump over it. And then he started raising it. And he started raising it 2 inches at a time. And before I knew it, it was at 3 feet, 3.5 feet, 4 feet, 4.5 feet, and it got more challenging.
Yep.
But he said, if you can, with good technique, jump over 2 feet, don't try to jump over 4.5 feet. And you see, in the beginning of my trading career, what I did, I set the bar 6 feet high. And I got frustrated that I couldn't jump a 6-foot bar. Yeah, see, the good thing about goals is you can set them as small as possible and then crush them. Yeah, just shoot for making 3-4% per month. If you make 5 or 6%, great, right? Tap yourself on the back. Then you can start raising the bar. And this is what I think I made a huge mistake in the beginning, by setting the bar too high and then getting frustrated. And jumping from one system to another system to the next strategy, right? And trading futures and trading Forex and trading stocks and trading options and swing trading and day trading and everything, because I thought the grass is always greener on the other side.
Right.
Well, it is, because it's fertilized with bullshit. Bleep. Okay, anyhow. Yeah, but this is where everybody tells you, okay, yeah, this strategy is better. No, it's not. And I really, if you focus on SRC, systematic, repeatable, and consistent, you'll be way ahead of the unicorn chasers.
Yeah, I like that you're saying that, because at the end of the day, the people who, we have those stories, right, that make it like lightning in a bottle, make 100%, 300%, you were saying 6, whatever it is. But there's also a lot of those people who I've met, and I'm sure you've met some, or have talked to some about it, where they do make that money, but then they don't make any money later. And talk about a little bit how that happens a lot in this industry for traders. Like, if they try to make money fast, they might make it, but then it kind of like just dwindles away pretty quickly.
You see, if you're trading long enough, you have these trades, right? I mean, you have the unicorn trades. It's automatically happening. This is why I said, when you control the losses, the winners take care of themselves. So yeah, this is where recently I did the Tesla trade. So I bought Tesla before earnings, because I got a signal. I just saw it on the trend line, and then I didn't know what would happen during earnings, and during earnings they jumped 18%.
Yeah, nuts.
Right? Boom. Okay, it happens, but you shouldn't expect it every single time. I also had my stop loss in place in case they would go to the downside.
Yep.
Right?
Speaking on that topic, since you brought up Tesla and you brought up that trade specifically, I just want to ask you this, because I know people are going to be like, oh, snap, like, why didn't you ask this? And that is right before earnings, because that surprises me. So I want to know, how do you gauge your risk before earnings? Because earnings could be radical, right? And you can get that unicorn in the opposite direction, right?
Yeah.
So how do you manage that? And I'd love for you to share that with people.
Well, first of all, I'm a big fan of backtesting and see what would have happened over the last 5, 6, 10 years if I had traded the strategy. And especially when I do backtesting, I don't factor in earnings, because this is where sometimes you will have the trades go well to the upside, sometimes to the downside. Now, if you think about it, this is where I said I'm trading the S&P 100 and the NASDAQ 100. They are usually not as volatile as a Palantir or, I don't know, some penny stock, some biotech stock or something like this, right? You don't see these huge surprises. yes, of course, it can happen that Intel plummets by 10%. It
Yeah.
can be that
Tesla is one of
jumps.
those that can move like
Oh, yeah,
dramatically to
yeah.
the downside and upside.
Right.
Because it was a great move to the upside.
This is why I like to have 10 positions, and Tesla is only one of the 10 positions, right? So,
So you're
if you think
diversifying
about it,
yours.
if you have a $20,000 account
Yep.
and you diversify it over 10 positions, so you're down to $2,000. Now, let's say that you're applying a rather huge stop loss of 10%. This means that you take a $200 loss.
Yep.
Based on the $20,000, that's only 1%.
Yep.
Right? So this is how you keep your losses in check, by diversifying over more positions. Now, I don't like to go crazy over 20 or 30.
Yeah.
Because I also don't like to have a correlated portfolio. What does it mean? Well, in the S&P 500, we have like, what, 12 sectors,
Yep.
right? So I can easily diversify over 10 stocks. I couldn't do it over 20 or 30. Then I would doubling and tripling up
Yep.
in an industry like oil and gas, for example, or consumer defensive.
You know, everyone who's watching this, y'all need to rewind this and re-listen to what he just said, because what I picked up too is like, you're really, really focused on making sure that if it is the black swan, you're not going to be wiped out, right? You're diversifying your portfolio. You're making sure you're in multiple positions. And in one position, like in the $20,000 example, if it's 2,000 each position, yeah, 10% on that 2,000, but it's only 1% on the whole move.
Right.
And so if you do end up getting smacked, it's not going to ruin you, which leads back to what you said earlier, and that is just manage the losses, and the winners will take care of themselves.
Right, and this will also make sure that you only trade with money that you can afford to lose. Right, this is why I would go to back to my younger self and say, you know what, rather work a year or two longer so
Yeah.
that you know that the money is coming in every month.
I would tell myself the same.
Yeah, and trade on the
Yep.
side and start growing your account, and then just keep working, keep growing your account through the first income stream. It makes it easier to build the second income stream.
100%. I agree with you on that. And I know people are going to have a lot more questions. They're probably going to want to learn more about how you trade on a daily basis. So how can they learn more about you?
I mean, if you can remember my name, try to look it up, Markus Heidkotter. I also have a company that's called RockwellTrading.com. There's tons of information there. And same as you, I do have a YouTube channel. There's tons of information. I'm doing a daily show where I'm commenting on the markets and showing my trades and show exactly where I enter, where I exit, the positions that I'm in. So that might be a good starting point.
Awesome. So we'll provide a link to his YouTube channel down below. And again, Markus, thanks for being here, brother.
All right. Thank you so much for having me.